Today we are very pleased to have with us Mr. Andrew, CIO of Equities Fund Management Division of AmInvestment Group, and Selina, also from AmInvestment Group, Fund Manager. Andrew, how would you describe your investment philosophy and style of your funds?
Whatever funds we manage, doesn't matter whether it's AmREIT or whether it's local or offshore, whatever, we start with a top-down approach. We want to see how well the country is doing and what's the outlook on a 12 months view. And after that, we will also try to reinforce it with the bottom-up analysis of the companies. So it's actually a combination, but it starts with the top-down. We just won't pick stock for the sake of picking stocks.
Alright, so what should investors expect, or what type of investors would be suitable for your fund, namely Asia Pacific REITs Fund?
When we first designed the fund, we wanted to make sure that it's for a client that is not too aggressive. That means the client expects a yearly dividend about close to 6% on a NAV average. And number two, they want to have appreciation on a steady pace. So if you want an aggressive fund, this is not for you. But if you want a fund that's going to be very consistent and boring to some extent, I think it's great. M Pacific REIT would fit into that category.
Selina, I understand that you are managing this fund. So what would be your main strength and weaknesses of your team managing this fund?
I manage this fund personally.
Alright.
And Andrew backs me up. So we practice the same research methods as the rest of the team.
Alright.
Top down, bottom up.
And also to add on to what Selina said, we are divided by countries and sectors. And when Selina first joined me, I think easily 5 years,
yes.
5 years plus, I designated her to be the property analyst and construction analyst. And so if you ask her anything about property all around Asia, she'll be the right person to do. So naturally, the REITs fund would fall into her gambit. We also have another person assisting her to do selected property companies around the region. So we have a primary, and we also have a backup who she's leading and grooming. So that she can go on leave, otherwise she can never go on leave.
Yeah.
And I will supervise them on a top-down approach.
That's good.
But there are also country analysts, let's say some in Korea, some in Australia, some in Singapore, some in Hong Kong or Thailand. If they come across an interesting idea, they would alert Selina. And that's how we function. We function as a team. We don't hide information from one another. So that's a very good synergistic combination. So a 1 + 1 is not 2, but it could be 3 or 4 in that sense.
Then moving forward, what's your outlook on the market, and how would you navigate? As you know that we have price drops, housing price drops over in China, and then currently the economy seems like slowing down. What's your outlook, and how would you navigate again?
I think I need to correct certain statements that you made.
All right.
Number one, if you look at China property prices as a whole, they have troughed. In fact, year-to-date transactional volumes, if my memory serves me correctly, it's easily about 11 to 12%. So if one were to read any of the public media and all the negative propaganda that's going on, then you avoid it. But suffice to say that the best performing asset class in the China market is the property sector. You would have missed the biggest run. Yes. So what our approach do, and I've always told Selina this, and that's how the fund has given a 10% return year to date, is that number one, look at the data. Don't go and listen to public news. Look at the data and just decipher the data yourself. So actually China has troughed, and China seems to be self-healing no matter what the government has done, and the government has done the right thing in trying to prevent an excessive bubble 2 years back. The fact that even before any easing in the market has managed to recover tells you that the market is stronger than what people sense it to be. And I think that's the best type of market. It must be self-healing, because then if it's self-healing, there's a structural change. Okay. Now, as far as property side is concerned, every country has its different phenomena.
Yes.
So like what Selina mentioned to me, and she has corrected me many times. She said that, Andrew, you look at Australian market, I know that the retail sales are bad, but if you look at the basic staple retail business, food and so on, they are pretty decent. And if you look at the portfolio, the ones in Australia that's done pretty well are the staple retail outlets, you see. And so we are heavily invested in that. And she also said, let's look at e-commerce. E-commerce is booming in Australia. And if you look at e-commerce, then you must have places that have logistic place, distribution, storage, and modernization. So we look at things like Goodman. And so the portfolio is skewed towards a certain aspect that has done pretty well. And even if it's in the office sector, we choose things where the supply is finite. It can't expand anymore. And demand, even if it's growing 1-2%, it suffices, you see, because demand exceeds supply. We went into Singapore after we went into Australia on a relative basis. And why I say relative basis is because we were already in Singapore, but we increased the exposure for a few main reasons, and that's when I say it's the top-down approach, and I leave it to her to choose the stocks. Number one, whatever supply that comes out of the commercial space office has already come out. And so occupancy rate dropped from 95-96% on office space to maybe I think
90%,
91, and that's why I need her, because I need her to give me the numbers. Okay. Actually, CIOs have so many numbers to remember. You need the right hand, left hand, and so on. And so if your supply has already been exhausted, and if demand is growing, then your worst case occupancy can only go up, you see. And if rental rates have stabilized, it can only truck and go up. And so that's exactly what she's been doing on the office sector. And say whatever you like to say about retail space, the retail rental index has been consistently on an uptrend even during the global financial crisis. And so the suburban malls are doing very, very well. And even she showed me a chart that even through the worst crisis, your occupancy is easily about 94, 95, 96.
Yes.
So with fundamentals like this, we lock it in based on our expectation on the growth now. We will nibble, and if we feel that there's a crisis, and we are happy that there's an EU crisis which creates volatility in the market and allows us to time the market to some extent. And so our entry price gives us the yield that we require. And if you look at some of the retailers in Singapore and in Hong Kong, like Link, which is all the suburban malls, the results are pretty good. And so we are into specific counters on specific sectors, and these sectors might not replicate itself in various countries. They each have a unique feature, I see. Yes. And then we went to Thailand on Tesco's, which has first right of refusal for, I can't remember the number of retail space, shop lots, first right of refusal from the sponsor. And we are gradually going to Japan. So you see, the opportunities are there. It's not a finite market. We are comfortable, and we will only go in when we are fairly secure in our outlook.
So I'd like to thank Selina as well as Andrew for giving us information regarding to this fund, AmAsia Pacific REITs Fund. Thank you very much.